All right, welcome to the daily market recap for Tuesday, September 16th. In this video, we'll be taking a look at the action day of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups like we do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open, and any trades that I personally take, you could sign up for the Market Pulse Discord using the link in the comment section. Getting into the indexes, first we have the NASDAQ QQQ, new all-time high today. Although we did close slightly red on the day, down 0.9% on a decrease in volume. Whenever you have a red candle close over the 5-day EMA on a lower volume, not usually a bad thing, usually just consolidation after a big move up. And it makes sense that we were consolidating today, given the FOMC meeting is tomorrow. I think the expectation is that we're going to have 25 basis points of a rate cut. Then you can argue 50 or 25. Really, I don't care what we get on an interest rate cut. I really want to just see how the market responds to that news. S&P 500 finished down 0.15% on lower volume. Did make a new all-time high intraday, but again closed red. Still over the support gap and the 5-day moving average. So little extended in the short term. IWO, the growth stocks of the Russell 2000, some weakness this morning down to the 10-day moving average, bounced right off that area, reclaimed the support gap, reclaimed the 5-day moving average, and then closed well here. So after two consolidation days, after a big ignite candle, we had a good shakeout, and now the deck is set in whichever direction that this market wants to head. But for the time being, you have the 5, the 10, the 20, the 50, and the 200 all in the correct order. Price above all of those, so the trend is still up. ARKK, great relative strength compared to the rest of the market today. Opened with a little gap up, closed right near the high of the day, up 1.6%, and really looks like this is a nice kind of base breakout or flag breakout, whatever you want to call it. And we're continuing to trend higher. And then IBIT as a way to track Bitcoin, great strength today. Back through that 50-day moving average, which we closed at yesterday. Basically back to the previous rally point high here. Now, do we confirm that move as a quick little higher low and start to break higher? Or do we consolidate and kind of make this a lower high overall in the structure? I don't know, but it does seem like crypto is getting some relative strength, some money rotation. So my guess is we go higher. We're in a very strong market, but wouldn't be too surprised if we lost kind of like the 5-day moving average, put in a higher low overall, but just a little bit lower than that quick pullback that we got. Next, we have the liquid leaders. Starting it off with BE. We'll sort this by price percent change today. My bad. There we go. BE, the strongest stock in the market. I don't think anyone would really argue with that. We've run from $16 up to $73. Another gap up 9% today, and really getting extended from that 50-day moving average, and especially the 200-day. So has been an awesome stock to trade if you're going long, obviously, over the 5-day moving average on expansions. Any pullback gets supported at the 10-day moving average or support gap zones. At this point, we are very extended, and I would be looking for a potential blow off top to short, which we'll cover in the short setups. ALAB, really quality consolidation over the 5-day moving average. And kind of something that I touched on with the indexes is when you have these like lower volume red candles over the 5-day moving average, that's not a bad thing. That's just healthy consolidation after a big move up. And we confirm that move with a gap up, close near the high of the day, up 3.25%. Alibaba, the rotation into Chinese equities continue, just going vertical at this point. Really good signs of strength here and with other Chinese equities. A little extended in the short term, so would be watching this for a pullback into the 5-day or maybe even the 10-day as a secondary entry spot. If you're in this long, it's not doing anything wrong, and Chinese equities are just breaking out of 3.5-year base. No rush on taking profits in anything Chinese related. CLS, we had that nice little push yesterday of 3%. Today, we followed it through with a nice move up 2.2% and a new closing all-time high. APP, another all-time high as well with a little hammer candle on bigger volume, closing over $600 for the first time. So congratulations to any APP bulls. I put Reddit back on the leaders list. After I did that, I realized I could have put OKLO, which is awesome, awesome price action recently. I went with Reddit. There's so many good names in the market right now. We're in a momentum market. Indexes are at all-time highs. So many industry ETFs are at all-time highs. So you can pick 10 different stocks than I have here, and I probably wouldn't argue with you. But I had to take out Rocket Lab, secondary offering, big gap down, close near the 20-day moving average. If we can get that, sorry, we'll change that to a gap. If we can kind of undercut the 20-day and then rip right back higher, that would be a sign of strength. But for the time being, there's so many strong stocks in the market. We don't need to kind of keep one around to see what it does at the 20-day EMA. CRDO consolidating over a rising 5-day moving average, very similar action as ALAB before that broke to the upside. Google, nice low volume consolidation right at highs. It was down 0.16% today, but honestly, just consolidating. And then AVGO kind of chopping here, letting the 5-day moving average catch up, down 1.2% on the day, kind of closed mid range though. Getting into the industry ETFs, first we have MSOS. And this one I tried on September 12th with the little gap up. I thought ugly close under the 20-day gap up would be a way to reignite that uptrend. We had two, I got stopped out. We had 2 more days of selling off. Today we had a gap up, unfilled gap, open near the low of the day, closed near the high of the day, back over the 5-day moving average, up 6.7%. Would love like a 1 or 2 day pullback to set up a pivot here. Let that 10 and 20-day moving average come right at that pivot. And then we have a really nice spot to show that momentum is back in this theme again. I wouldn't be surprised if it just continues to rally here and we don't get that though. XLE, energy ETF, another theme that's kind of starting to show some relative strength compared to the rest of the market. Got over the 200-day moving average, put in a higher low against the 50-day. Another pullback into the 20-day, gap up, open on the low, close near the high of the day on a pickup in volume. So we might be seeing some rotation away from tech into some other groups of the market. Block, more of the AI data center play than blockchain right now. New all-time highs, very strong action there. KWEB, a new 52-week high, and we go to the weekly chart to see just again the most beautiful 3.5-year base that we just started to break out of. So want to keep focus on all Chinese equities. A couple other things, XBI, biotech ETF. I do have a position in this with LABU that I started on August 12th. Little ugly action yesterday under the 10-day moving average, then tight price action today. Honestly, the 200-day is just getting flat at this point. So when that happens, you got to expect more volatility than other names. Like if the 200-day was in an uptrend, then you shouldn't expect a lot of volatility in a strong market. But because we've been in a downtrend, because there's overhead supply, there's going to be more volatility. So I'm just kind of sticking through that volatility. If we close under the 20-day, I'll probably kick out LABU, but it would have to be on a pickup in volume. And I don't really see that happening with rate cuts almost guaranteed. So we'll see what happens tomorrow. Other industry ETFs that I want to cover, semiconductors, new all-time high, closed basically flat on the day. Retail ETF continues to consolidate over that 10-day moving average, closing above the 5-day the last 2 days. Really good action there. Home builders, I guess we'll cover this in the long setup. Did get stopped out of that today. And then gold miners, first red day, first close under the 5-day moving average in this entire stretch on a pickup in volume. So maybe a sign that the gold miners are just a little stretched and need to pull back. Maybe the 10-day, maybe the 20-day and kind of rebase here. But just a phenomenal run for gold miners there. And then NLR, nuclear and uranium themes, little give back after yesterday's expansion candle, up 6.8%, 6.9% yesterday, down 2.7% today. But You saw the leader, OKLO, actually finish green after being down, I think it was about 4.5% at the like middle part of the day. Some other weaker names in that theme did give back a little bit, but red candle close over the 5-day moving average, not really a concern. Next, we have the long setups. We'll go most liquid to least liquid. First is BMNR, and this probably was correctly buyable today through yesterday's high of day. Now we're kind of playing with the FOMC meeting, which I mean, that's happening during market hours. So it's a little bit different than having like a key earnings report or something that's going to happen after market hours where you can't really manage your risk in real time. The nice thing is we can manage our risk in real time. So still like, I'm fine with taking trades tomorrow. They have to be very, very tight risk though. So looking for more like typically shakeout spots and try to get positioned before the FOMC meeting. So with this, would just be looking for a pullback into the 5-day moving average, like a higher low, and then a recapture of the daily VWAP as a potential entry. Stop would be today's low on this. If we just gap and go, I'm not going to be chasing this, but really nice kind of wound up setup here. NBIS has been consolidating above the 5-day moving average on declining volume ever since the gap up. We were finished up 50%, had a secondary the next day where it was only down 2%, and now just kind of digesting that secondary, getting nice and tight. This I would be fine with taking on a break over the day's high if that happens after the FOMC meeting. Otherwise, an undercut of today's low, recapture of that area is buyable versus the low of the pullback. SOUN, this basically hit my buy point right at the end of the day, and I usually only trade the first 90 minutes. Good shakeout under the 10-day and the lows of this pullback, bounce to the 20-day moving average, and a name that has a pretty nice base here and has the ability to run ADR of 7.5%. So you don't need to put on crazy positioning to actually move your account with this name. We had the false breakout yesterday, then the false shakeout today. In a perfect world, we would get a tight candle tomorrow, but because of the FOMC meeting, I doubt that's going to happen. Just kind of looking through that 1475 area, the pivot from today's high and what was that, Friday's high as a potential entry. Stop would be the low of the day tomorrow. MP, little gap up today that got sold into. Still just watching this 50-day moving average and gap zone right around 63.86 as a potential undercut and reclaim. That would be the entry. The stop would be the low of the pullbacks. First Solar, a lot of solar names showing some good relative strength. They don't trade great. Very wicky. Like the 200-day is just getting flat. Going back to that XBI, the biotech ETF example, when the 200-day is flat, expect a lot of volatility. But kind of similar with the OKLO trade that I put on, which we'll just kind of use that as an example. OKLO had a shakeout on September 5th under the 50-day moving average, but then closed well. Then had a very, very quiet day. Look at the volume, very light volume, very tight price action. And then the break over that high was the buy point for me. And from there, I mean, it's been a really easy trade to the upside. With FSLR, similar action, undercut of the 20-day moving average, an even stronger close. A little bit more volume today as we churn above the 5-day moving average, but still the pivot is set right at like 208.25-ish area. Through today's high is the buy spot. Today's low would be the stop on that. Unity software continues to trend higher. Another name, pretty high ADR, 5.2%. For this, looking for a pullback into the gap zone under the 10-day moving average. Just a quick undercut and reclaim of that 43.60 area. Stop would be the low of the pullback at 42.50. RKT shook out the support gap and the 10-day moving average today. Tomorrow, I'll be looking for a higher low undercut of the support gap. So kind of like an immediate response to that support gap low, managing my risk with the stop under today's low. Software stock, NET, little gap down today, pick up in volume as we pull into the 10-day moving average. I would be looking at the secondary gap zone just above the 20-day as a potential entry. That's also kind of like a breakout retest area. Stop would be the 20-day EMA. AEO, we talked about how the retail ETF is acting pretty well at new highs. AEO, big explosion on volume, back over the 200-day moving average. And if we're following the ANF comparison, now we are looking for a pullback into the HVC as a potential buy point versus the 10-day moving average. And this would be something, because it's not like tech related, that I'd be a little bit more comfortable with buying, like going into the FOMC meeting, and where everyone's positioned pretty long on the Nasdaq. If you look at the commitment of traders data, where the S&P 500 and the IWM, the Russell 2000 positioning is actually still short in those two. So I'll be watching that HVC area, the high volume close from their earnings gap up, as a potential entry. Stop would be the 10-day. ITB, the home builders ETF. I did try this today on the undercut of the support gap. Put my stop. Well, I traded NAIL, which is a triple leverage version of this. Had about a 2.5% stop. Got stopped out right near the low of the day. Actually, it'd be funny if it was actually the low of the day. Let's see. The low on nail, 80.37. My stop was 80.80. So pretty close to the low of the day for my shakeout there. Just looking for a higher low pullback in the morning, undercut that support gap. That would be the entry versus today's low. Again, if we're going to get rate cuts, this is a theme that we saw massive accumulation on the way up. And now we're pulling back to the 20-day for the first time since taking the 200-day moving average. Doesn't matter that I took a small loss today. I'll trade it again tomorrow to skew that risk reward in my favor. Next, we have PL, another name like NBIS that had an explosion earlier, September 8th on earnings, closed up 47.5%. Little gap down after they did an offering, and even stronger than NBIS, that offering got soaked up. We're back over the HVC, traded super tight on very light volume today. Just looking for a break through today's high, called basically through 10 as the entry. The stop would be today's low. The 5-day moving average will probably be catching up to that area as well. So if we have like a morning shakeout under the HVC, a reclaim of the HVC would then even be a better buy spot. Then we could manage risk against the 5-day and yesterday's low. But tons of power. Then you have that compression of volume and price. Will come expansion in one direction or the other. And it's a bull market. So I'm expecting it to go higher. GDS, Chinese stock that has this massive base, big explosion. What was that, last Thursday? Up 15%. From there, pulled back into the 10-day moving average, touched off that today, closed back over the 5-day moving average. Looking for kind of like a red to green move where we gap down to start the day, reclaim the closing price. That would be the buy point versus yesterday's low. A little bit wider of a stop, but so many Chinese equities are just breaking out and going nuts here. So want to get as much exposure as I can in a way that I can still manage my risk. I'm not just saying, okay, buy everything China here. No, I'm still using normal entry tactics, using correct position sizing and stop placement, all that good stuff to manage risk. But it's a main focus for me. Next, we have OUST. This another one with a huge ability to make or ability to make huge moves from 680 up to $35. First test of the 50-day moving average got supported. We do have this resistance gap, and because we have that gap down that we tested on September 15th yesterday, I want to trade this on a shakeout versus on strength. It's fine if I miss it and it just goes on strength, but I'll be watching for a higher low test of that 50-day moving average in support gap zone right at 27.50 as potential entry. Stop would be the low of the pullback. And then finally, RSI. This name has been really taking off the last couple of years from $3 up to $21. Now pulling into the 20-day EMA for the first time since the highs. Has a support gap there. If this was a super liquid name, this would be like my main focus. Unfortunately, it only trades $31 million a day. So Can't size it up as much, and it doesn't have as much conviction for me. But the first time a stock pulls back into the 20-day moving average after making a new high, and there's a support gap there, it's a spot that I will be watching. So undercut of that support gap is, and then reclaim is buyable versus the lows of the pullback. Got 8 short setups to cover because we are kind of going into a binary event tomorrow with the FOMC meeting, positioning pretty long on the Nasdaq, pretty short on the S&P 500 and the Russell. Your guess is as good as mine. Do we rip higher and like really go into an acceleration period on the indexes? I think that's possible. Is this a sell the news event where everyone's positioned in tech names in the Nasdaq and we're using this rate cut to sell into that liquidity? I think that's possible. I think anyone who says that they know for sure what's going to happen is probably not someone that you should listen to. So we'll just have to play whatever the hand that the market gives us. So I do have some short setups to go over. Again, most liquid to least liquid. First one is Palantir. This one topped August 13th, had a big pullback, first pullback to the 50-day moving average, which after a lot of volatility and chop, it eventually resolved higher. Now looking for an uppercut and failure of the gap zone of the HVC level from earnings as a potential short. Again, I would want to be getting in position for this in the morning. So if we get a morning push, an uppercut and fail, that would be the entry. Stop would be the high of the day. I want to keep risk very, very tight, both long and short setups. Anything new going into tomorrow because of the binary event. Um, so we'll watch that 174 area as a potential lower high overall. And then if the market does need time to rest, like the fact that this isn't at highs and it has been a liquid leader probably means that this is going to go lower. BE, awesome moving stock. Definitely would not be shorting this if we didn't see this kind of accelerated move more recently. I don't have a short position in this right now. Um, what I would be looking for is like another big gap up. A perfect scenario would be big gap up, huge expansion candle on good FOMC news, and then another gap up on what would that be on Thursday? That would be like A plus perfect parabolic short setup. Tomorrow, if we get a big gap up and a little morning rally, then you lose the daily VWAP on a pullback. That would be my entry. Stop would be the high of the day. And again, this is like an awesome stock. If you don't want, like, if you don't short parabolic moves, that's fine. I would not blame you. We're not like we're in a momentum market, and doing that a little bit too early can cause some pain. So we'll see how this plays out tomorrow. LITE, exactly the same setup, has really moved off a low from 50 up to 170. We're starting to see volume pick up as we accelerate the move higher, which is usually a sign that eventually, when you get that acceleration, you get the acceleration on the other side. Whether that comes with a big gap up and then a reversal or a gap down, we'll find out tomorrow. But just a name that I'm watching. If we do get a gap up and like huge push in the morning, then I would be looking to find a position to get short. NEGG, one of those momentum names that went from $3 up to $130, and then just as quickly went from 130 right back down to $30. From there, we've bounced, put in a higher low, and we're consolidating here. I think you could say that this is a long setup just as much as a short setup. The only reason why I'm leaning more towards the short side is because the volume has been elevated the last couple days, and we haven't seen price appreciate while the market's been pretty red hot. So double inside day on relatively high volume makes me think that this is churning, especially because the way we topped here, where we pulled into the 10-day, uppercut the resistance gap, and we had big volume through this area. There's so many people trapped at this $130 range that on any bounce that like they sold it down straight for 7 or 8 days. Any bounce has been stopped out and sold off. So my guess is this is going to break to the downside, but if it breaks to the upside, like not something that I want to be shorting on strength because of this higher low and because of the pretty steep sell off. But on weakness through today's low is a short versus today's high. Sezzle, this was on the watch list today through yesterday's low, so that did trigger. I did not take that trade myself. Again, just using a lot of these setups as feedback from the market. So like I have alerts on all these setups that I share, but whether I actually take them or just use them as market feedback, it's kind of a game time decision. Very, very low volume today. Just a name that has gone through a bunch of relative weakness, not really rallying with the market, still under the 20-day moving average. 50 days been sloping down since the earnings gap down. So a little uppercut and failure of this pivot at $91 is the potential short versus whatever the high of the day is after that rally fails. MMYT, slower mover. What is this? A 3% ADR. But if you zoom out, you can see a very clear stage two uptrend, stage three top, and it looks like we're going to be entering that stage four decline. This is make my trip. So some other like leisure stocks, Royal Caribbean, made recently made new highs and then immediately gave all that up. So it seems like the traveling group is kind of weak, and this is a name that's, like I said, chopped, built a really long stage three top, and from that we will eventually unwind. And this rallied from $22 up to $120 in a couple of years. So very, very similar to the setup with SFM, which was a monster stock on the way up. It Sprouts, like a grocery store, from 26 up to 180, built that big stage three top, and then has started a stage four decline, really starting to pick up now. And that's the type of action that I expect out of MMYT shortly. Next, we have ZEPP. Tried shorting this today, and it looked like it was finally going to be breaking down. At the end of the day, I'm just not willing to hold these momentum names overnight unless I have a huge profit cushion. So gave it back, made a couple bucks on it on the short, but would be looking for another gap down opening range break to short versus the high of today. With this type of shakeout and the volume that came in today, I wouldn't be surprised if we have another leg higher, just like what we did from like August 18th to what is this, August 29th, where we consolidated in the 10-day. This just needs a little bit more time. Consolidated in the 20-day, big shakeout there. But it has run from $2 up to $55 or so. So if momentum does get sucked out of the market with the FOMC, I don't think this really stands a chance to go much higher. If the FOMC is a positive reaction from the market, this is not a name that I want to short on strength. I only want to short this name on weakness because it shows you just how powerful it can get. And finally, DXYZ. This has been on the short watch list for a while because it's been just in a massive downtrend for a very long time. Not doing much good of anything. The only thing is only trades $11 million a day, so you can't really size it. You have to be a little bit careful with position sizing. But through today's low would be the entry, stop would be today's high. So that's going to be the daily market recap for Tuesday, September 16th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the market open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link below. Have a great night, and I'll see you guys in tomorrow's video. Good luck.